Paul Murphy, Deputy, you wish to speak?
Thanks very much. Sorry I had to miss some of the meeting. I was at a meeting about workers being paid less than €5 an hour by on a state contract. Just to start with material that we have gone over before my time, but just in relation to question 32 about the compensation of the CEO and the board. Obviously, in the response, you effectively told us to look it up for ourselves. But could you just spell out for us the compensation package that you were on last year and the previous year?
It was the same for the 2 years, Deputy. My pay was 619,000. There was 34,000 as other compensation, and then there was payments into the group pension fund, which I'm sorry I can't remember, but I think it's around 820. So that's the components of it. That's what's in the annual report. Sorry, 843. I beg your pardon. So the pay that the group made into the pension fund was 186,000.
Thanks. And do you think it's justified that the salary cap of 500,000 will be exceeded for yourself?
As I've said on a number of occasions, my position on the board and my compensation is decided by the shareholders of the bank. It's put to a vote to the shareholders every year. It was put to the shareholders in May of this year, and there was 1% of the shareholders voted against me being re-elected, and 1% voted against the pay.
And do you consider the fact that you were one of the executive directors at the time of the bank bailout that should have any bearing on, for example, the government, which is a shareholder, on their assessment of your performance? Do you not think it's the case that, given that you were there at the helm at the time of the bank bailout, for which we all pay and continue to pay water charges, etc., should that not mean that really you aren't at the helm anymore?
I can't say anything more. I stand before the shareholders. I stood before the shareholders when I got appointed to the position. The shareholders could decide whether or not I did that job. That was in March or February 2009, 2010, 2011, 2012, 2013, and 2014. I stood before the shareholders. They decide whether I'm doing the job or not. That's their decision, Deputy.
I have a problem with the decision that some of the shareholders are making. Just to go to the arrears figures, on my calculations, adding together the SME corporate loans arrears, the mortgages in arrears, and the property and construction in arrears, you have 16.4 billion in arrears out of a total of 83.3 billion, which is very close to 20%. Is that not very high?
Yes, absolutely. I completely agree. It has come down. We say in our, we discuss with all the stakeholder shareholders, the defaulted loans are still too high. It's a key criteria that as a company we're judged on by everyone as to how the defaulted loans come down. The first factor that as a contributor to that is to ensure that insofar as we can, and the economies are a function of that, is the number of customers defaulting reduces. So in each of our portfolios, the number of customers defaulted has reduced. Then there's the absolute quantum of defaulted loans. What is your provision coverage? What is your best estimate of your loss against that? So we hold a provision coverage of around about just under 50% of coverage against our estimate of potential loss, taking into account the collateral, etc., that we hold. And then we look at the defaulted loans. Are they themselves reducing? So are the arrears coming down? Are you holding sufficient coverage ratios? And are defaulted loans? So it is still too high. It peaked in around about early 2013, and it is reducing. And it is a very significant metric. It is much too high.
Okay. Just in relation to question 4, we asked what proportion of your existing mortgage holders would not have qualified for a mortgage under the proposed new central bank mortgage deposit and loan to earnings ratios. In your answer to question 24, you referred us to your answer to question 25, but your answer to question 25 does not answer the question. I mean, the question is, if for example, the 20% ratio was introduced, what percentage of your mortgages would qualify?
It's difficult to give a verified question because it has someone hypothetical. So that's the product we offer. So if, for example, we said we cannot, if we use an example, say we cannot offer you a 90% mortgage and more, a proportion of our customers say, okay, I'm a bit disappointed, but I'll take the 85%. So it's hard to be definitive as to who wouldn't have. We make an offer to the customer, The customers say, well, I like that or I like that. We assess the customer in terms of the primary assessment that we make is earnings capacity, income capacity. We see the mortgage as a security. But as my colleague pointed out in answer to an earlier question, we are looking at a loan to an individual based on their assessment of their income capacity. So if we look at in particular the multiple, there's two features to that, and we look at the income multiples, and the income multiple is the primary criteria under which we assess someone. So if the income multiple doesn't meet our assessment of their mortgage ability to repay, the LTV is not a deciding factor. So we start with the income capacity. We look at the potential drags in their income. We also then assume that interest rates don't stay forever. So we will assume in a sensitivity test that we add about 250 to 300 basis points in terms of making sure that as interest rates arise, then the customer's repayment capacity, everything else being equal, still remains sufficient for them to service the mortgage. And then the LTV comes into play, Deputy. I don't know, is there anything you want to add to that?
Okay, but say take the hypothetical out of it, right? Say that we don't imagine, and I accept that there are people who perhaps, if the new rules...
If I can help in a different way without trying to give the definitive
Sure.
answer, a material proportion of our customers would not qualify because of the LTV cap in particular. We would feel that a lot of our customers would qualify under the income potential, but the LTV cap would cap. And then there is an obvious concern you would have as to whether customers take on unsecured or other forms of higher interest-bearing debt to try to deal with that. So that's an obvious issue we would face. We're looking at them, we're looking at where this is, and we will decide whether we'll make a submission to the Central Bank. But in answer to your question, Deputy, I think the income criteria is more likely not to be the issue for the customer. It's the LTV, the ability to get the deposit.
And did you make any representations, any lobbying, informal, formal, to the Central Bank on this issue?
We have not done so, but we have an opportunity to consider as to whether we wish to make a submission. We haven't made a decision on that.
Then just moving on, in terms of, is it accurate to say that the number of repossessions is increasing year on year?
Yes.
And what would you ascribe that to?
There's a combination of factors, Deputy, but there is a combination of factors where we go right through the CCMA process. We get to a situation coming to the end. It has been also, if we look at the way the mortgages have evolved, you had a spike in defaults. You have restructure as many of the mortgages as you can, but inevitably, because the issue started to come manifest, reflecting the economy and a range of other factors in 2009, 2010, coming into 2011, then you have a time period. So there's a factor of that, yes.
And what do you do to protect those who live in the homes, and so people aren't thrown out of their homes? I mean, there's two elements to it. There's owner-occupiers, but there's a higher ratio, as far as I can tell, of repossessions of buy-to-lets, quite a significantly higher than owner-occupiers. But there are people living in those homes. The Coynes family, for example, their landlord was not a Bank of Ireland customer, but another bank. But there are tenants being thrown out of their homes as a result of the homes being repossessed by the banks.
If I go to that one, and I give a very specific example, Deputy, we are selling in the market a portfolio of approximately 1,000 homes, of which 800 are received buy-to-let properties. We specifically say in the documentation that where tenants exist, they are tenant protected. So buyer beware, we're telling them. But we believe that it may be better. If you're a tenant, you have a lease, you're meeting the terms of your lease, you may be better in a different landlord who has the financial capability to meet their commitments as a landlord. There is some potential, and we see people who have more experience in other markets are coming into a market and saying, we can provide and we can meet our commitments. So if we appoint a receiver to a buy-to-let property, the receiver, if the tenant has a lease, then that lease is taken by the receiver. A number of the potential buyers are looking at these properties for income. They see it as an income potential, they see consistency of tenants, and they see it as an opportunity for them.
Just finally then, on the question of owner-occupiers, it would make a certain financial sense for the bank now to adopt a more aggressive stance in terms of restructuring or repossessions because prices are going up. I mean, it's worth more to the bank. Is that reflected at all in terms of a more aggressive policy? For example, I was contacted in the last week by someone in Tala who claims that they've been brought to court for repossession by Bank of Ireland with no real attempt to negotiate an alternative solution, that a quick move to repossession.
We can't discuss a specific case, but certainly if you would like to send the details to either myself or Mr. McLaughlin, then we will have that case reviewed, Deputy. But in our primary concern, a repossession crystallises a loss for us. We carry a provision.
The loss than it used to.
It may or may not, but our desire, like the customer's income capacity is the key thing that we look at. So our strategy and the restructuring and in observance with the CCMA codes, etc., is that it's the income capacity rather than the absolute value of the property that defines our strategy.
I beg your pardon, Chairman. Thank you.